Welcome to TradeTheNBA.com. This is John. This report is for the 29th. Well, we're going to end out the month going into what we clearly can see now because the numbers came out from the Fed as the Fed shrank its balance sheet during this entire period, which is why we ended up not going anywhere because without the Fed buying stuff up, hey, guess what? There were more sellers than buyers because that's generally how it works. But we talked about this anyway. There's just been this steady particular algo support. Pump it up in the pre-market, let it fall back down, and as long as there's not an excessive amount of liquidation, they scoop it back up, sell it, within the strength on the short covering, and rinse and repeat. Now we still have this dip below the red line from back over here, just above that 28.67 range. We kind of filled the main body of it in right here as we just came down on this last move right around the 29.83 range was where that open was, and I think it was our low 92. So a little bit further still, I think probably is within reason for decline and still be exactly where we expect to be. We've had weak signals for quite some time on the S&P. The Nasdaq's been stronger, but still produced the exact same thing. When you get those DOC spreads and you have a fall off of both short-term, mid-term buyers, you get the same thing. We're still fairly decent from a red DOCs, so despite the fact that we've had some softness, that's all you can really call this, still pretty decent overall. And Euro, of course, nothing. I mean, they're just going to keep this right in this range. It's comfortable for U.S. trade, so no issues there. And of course, until there's some kind of reality on oil, yes, you've seen this spike in cases, some renewed restrictions. And as long as you continue to have this staggered economy set up, you're going to have problems. There's just no mechanism that supports this concept, at least from an economic idea. They keep wishing it, and of course you can print money forever, so that's great until such point as people say, well, it's not worth anything, and then that's when you have a problem. But where else are you going to go? The rest of the world's a mess too. So that leaves commodities, gold, and some of these other things. They're going to be quote-unquote safe havens just from an inflationary standpoint or just from a devaluation standpoint. In this particular case, it becomes a store of some intrinsic value. It's still needed worldwide. From an intraday standpoint, it was still pretty clean because we were talking early on at the beginning of it when we kept pushing back towards the 30.75. We'd hit resistance, start getting weakness, and we couldn't get this was the last steel reset on the DOC, and it corresponded with this very clean power mode 2 sell signal here, and boom, we just cascaded lower. We hit the 30.50, no support, no renewed setup there, and that just led to the next cascade. Now, of course, once you get above that plus 13.5, you can see pops in there. Sometimes those pops will come back up to 38%, particularly on an extreme oversold. But in this particular case, there just wasn't anyone, and the next level wasn't down until 30.13, which is exactly where it finally based out enough. They supported it right along there, and then produced a little bit of short cover within that range to get back up to the 100% on the falling 100% Morganacci line. Got it right back up to there, and then that's just became a back and forth within that range. But again, the 30.13 was the critical, and we keep seeing a little breaks below it as we were moving along here, and that becomes a little bit more treacherous because at some point the next one's not going to be until the 29.90, and once we broke right below there, that's exactly what we headed towards. Now, of course, it stayed above it by the 2 points we were talking about, but that's hardly anything to write home about. But even within that, still popping right back, and it's beautiful to just watch these ranges right in between, and they're rather clean and effective. So I wouldn't call it anything dramatic. Now, I don't pick a particular area and say, oh, just because it's reached it, it's an automatic buy. No, you have to look and see what the readings are. I mean, when you're reaching it here at 3013, I'm expecting this to break down on this configuration here because that's just pure weakness. And sure enough, that's exactly what it did. I would have been looking more for that 2990 to pop in, but they clearly added enough support in there, as we could see with that rising DOC red as we moved up towards the above the negative 7.5, and then eventually here, right when we get to the 23, we started breaking up, and then got above the zero line. But again, when you can't hold above the zero line, that's usually problematic in general. We're back at it again here as we begin. But that was pretty weak from a finish. I would expect it will test back down to that lower. I mean, still, the ideal situation would be to fill that setup. Of course, you've end of month. Still going to look good for most of the numbers for everybody that in the investment community. And that's all they pay attention to is that they match the performance or do better. And that's continuing to be, the theme and where they're going to go with it. So, all in all, I'm very happy with the way things have started for this summer. I mean, we expected extreme volatilities, and I wouldn't call it, crazy extreme, but I think that, when you're seeing these kinds of ranges, that's excellent volatility, particularly for summertime. And we're not talking small days. These, everyone talks about low liquidity. These are big volume days. So we're moving some securities back and forth, but that's what it takes when you're looking at it from a fund standpoint. Oftentimes, if you want to acquire 1 million shares, you may start off by shorting, and significantly, just to drive price down so that when you start sucking up the stops from other people, you're catching at a lower weighted price. And this is where it gets complicated in the idea of, you're buying and selling, maybe you sell a little bit less as you go up if you're within your range, or if it goes too high, you have to sell more of what you have, and you keep doing that until you get what you need. So it's not as simple as it sounds, but it can take a while unless you can create an off-book purchase, which isn't so simple if you're trying to hide what you're doing. That is, though, the broader issue. 67 points down was still pretty significant in general, and still plenty more room to go to the lower side. And that's really just going to depend on what we start to see from future forecasts and whether or not these outbreaks represent. See, it's one thing to have the increased cases. The real issue becomes another week or two before you find out if there's a massive increase in hospitalizations, and that really becomes the test. So we'll keep an eye out for it. We'll always be paying attention. Everything else from a current standpoint says more status quo, and status quo at this particular point is volatility. So enjoy it. It's exciting. As always, though, trade well. We'll talk to you later.